G'day guys, it's Brad Flynn here, and I wanted to bring up something that came up recently with some comments with some clients of mine about cash flow and how it relates to your P&L, because they were really confused about the P&L and how the cash flow was working in their business. Now note, this is for an accruals-based business, not a cash business, okay? So what happens is, let's say we get a sale, we generate an invoice and we give it to the client. What then happens is the invoice gets logged here, but it also then gets logged here on our assets, okay? Because now we've got someone who owes us some money, so that's an asset. Now what happens next is quite interesting, because at the moment no money has changed hands. All it is paperwork. So when this person actually pays the invoice, what will happen is on our assets, we will, instead of it being a creditors listing on our asset, it will go from creditors to cash. So in your balance sheet, you'll have a creditors section and you'll have a cash section. So your creditors will go down by whatever the amount is, and your cash will go up by whatever the amount is that they actually pay when they pay the money. The other thing that will happen is you will see the cash flow over here. So you will see whatever that invoice was pop up over here under sales on your cash flow statement. So this is like a kind of real-time cash flow statement that looks at all these things and how they hang together. Now, let's say you buy something for your business. It lands here on your fixed expenses, okay? So someone gives you an invoice, it gets measured here, and then it also gets measured here on our debtors, okay? So now we've got someone has a debt to us, or a receivable, a payable. Now what happens when we pay that bill is money will come out of the cash, it will go from our debtors balance will go down, and our cash balance will go down. And also over here on our cash statement, we will see an operating expense where that payment will then, the payables will then go down, all right? Now your profit and loss is really deceptive. Your profit and loss is more for a general overview of how the business works, but it's also how you pay your taxes. This is what the government uses most to work out that bottom profit line, what your taxes are. So hopefully that's helped you understand. It's called double entry accounting, by the way, because you'll notice whenever I did one on one thing, I had to do it on another thing. So there's always two entries that happen in accounting. So hopefully that helps. Put your comments down below, subscribe if you want to keep updated, and thanks for watching.